Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Hey, what's up, everybody? What's going on? Brinks Trades here, back with this week's chart breakdown. Hope everybody's doing well. As usual, where's everybody calling in from? Hope everybody's doing good on this Saturday morning. Let's see. Go ahead and get my screen shared. So again, if you guys don't know me by now, I am the resident indices analyst on this Trading Nut podcast. And so basically, thanks, shout out to the platform for letting me come on and, do the breakdowns for, I think we've been going since last September or October. So coming up on a good, almost 7, 8 months now. So definitely been a really cool experience to come on and work with these guys over the past year. So Nathan says, good day, sir. Nathan, where are you calling in from? Raven Photography says, hey, hello from Tampa, Florida. Hey, how's it going? And, I say this every week, but you guys know that I haven't, usually between the market close and the open of the next, the market close on Friday and the beginning of these calls on Saturday, I do not look at the markets. This is usually my first time looking at the markets for the week. So I'm going to keep things pretty, yeah, I knew that was going to happen. Pretty chill this week, and really just looking for an overall breakdown and kind of where we're going to go for next week as well. So Cape Town, South Africa. Okay, cool. Johannesburg, I think, is also in South Africa as well. It's pretty cool. So yeah, this has been really cool. So a lot of Africa's in the house. Right, Johannesburg's in South Africa, right? That's I'm thinking that's where that's at. I've never been to Africa, so correct me if I'm wrong. But okay, cool. So let's go ahead and get into it. We got about 15 people on, so I'm not going to keep this too long. It's going to be a pretty short session, especially since I didn't do one last week. And I just want to make sure that, we kind of catch up from where we were and kind of get a better understanding, again, of where we're going to go this week. So, again, I always start with dollar index, right? So dollar index It's a new month. It's June, so I want to just take things over to the monthly time frame really quickly and just kind of see where we're at. And a couple months ago, this was actually probably the beginning of the year, actually going into last year, I made a call that we're going to trade back into this old imbalance here over the next few months, and saw that the market really has ran up here a couple of times. Once to fill in this old imbalance, and then secondly to fill in the secondary imbalance. In the long-term picture, like over the next few months, we could definitely see a world where, we can definitely see a world where the market is going to continue to drop and continue to go down, right? That's long term. I mean, that's like a rest of the year going into next year kind of thing. So we definitely can see a world where that. I mean, just respecting, failing to break through these imbalances and then creating new imbalances to the downside, you could definitely see a world where the price is going to continue to go down. So, but that's very, very long term. Obviously, that's something that's going to take years to play out or weeks to play out. If we break this down to a weekly time frame, just again, new week, I really want to see at some point in time this trend line get violated. We see an now inverted fair value gap here on this weekly time frame. And so let's see. Let's make this orange. We're seeing a failure to break through here. We've seen a couple levels get hit and retested, failing to break through consequent encroachment. So I can see a world where over the next few weeks, we can see the market continue to do something like this and really start reaching for these levels of liquidity here. Breaking things down at the daily time frame, this is going to be where we're going to spend most of our time, right? Ideally, if we want to see something like this happen over the next few weeks, we would like to see the market do something like this. We run back up into this level again, potentially take out this high and then go out. So pretty much lined up with where, we said with the weekly. Again, 104.74 is the level that I'll be looking at to see how it reacts and respects that. And then, yeah, just to kind of narrow this out again, came up here once already. So yeah, somewhere. I could see a world where we run back up here. We might not even get as high as this inverted fair value gap. So I'll be looking at 3 levels here. Obviously, this high right here to see how the market reacts to this. I'll also be looking at this zone right here. Can't make this smaller. And then, so this high, these inverted fair value gaps, or this level right here, and I'll be looking at one of these 3, or I guess 4 levels to look for the opportunity for the market to continue to go short. So it could be something like this. It could be this. It could be something like this. The market runs up and goes there. So basically what I'm saying is, and this is the fun part about the Saturday calls, is that I don't know. Obviously, the market's closed. We don't know where the market's going to run to on these levels, but we know that going into next week, we want to see something like this, right? We want to see the market run into at least one of these levels, look to get to go short. So overall, I'm bearish on dollar, which means I should be bullish on indices, right? And we'll kind of go ahead and paint and see what happened. And so I had an opportunity to, if you guys aren't subscribed to my YouTube channel, Brinks Trades, so I try to go live there a couple times a week. Narita popped on. Hey, Narita, how's it going? So yeah, I try to go live a couple times a week with trading and really just try to, again, give you guys, just a live look at what it really means to be a trader. I think a lot of times when we're on the internet, we see everybody flashing these profit shots and everybody's making thousands of dollars, hundreds of thousands of dollars, or $10,000 on a day or a week. And sometimes it's really hard to kind of see what goes into that. And a lot of times, being online, people just are not, authentic. Get a lot of it's screenshots, a lot of it's demo. I've seen everything in this industry. I've seen people take MetaTrader shots and they have two accounts where one's going up, one's going down, and they just post the one that wins. I've seen people create these like MetaTrader apps, style apps where they can just fake the amount of profits they have. It's like you type into a number and it just shows you, like, you type in a bunch of numbers about where you'd want to get in, where you want to exit, and it would act like it's an actual MetaTrader thing. So there's a lot of like fake stuff that goes on in this industry. So I just want to be an authentic person that really shows what it means to be a trader, because there's real money floating in these markets every day, right? If people are consistently losing, that means somebody's consistently winning on the other end of those trades, right? So yeah, I just want to be that person that does that. And so those live sessions are really designed to do that. So if you're subscribed to my YouTube channel, you can just search me. It's Brinks Trades, BRINX Trades. It'll pop up. It's a little animation or a little like drawing of my face. Yeah, subscribe there and you guys can see me, follow me live, hit the notification bells, all the YouTuber stuff, hit the notification bell for alerts and you'll know every time I go live to trade. But usually I try to do it 2 to 3 times a week. Okay, so with that being said, so we did our analysis on indices. So let's go to NASDAQ. And I'm not going to be too long with these because there's, oops, thank you. Where's it at? Huh. But I'm not going to be too long with these analysis. So again, starting with the new month, I'm on the NASDAQ. We just kind of want to take a higher level monthly time frame look to see where we're at. And clearly, we're making higher highs, right? So on the higher time frames, which when we get to this monthly time frame, it's such a big time frame that, a lot of trends can happen inside of this. But just overall, knowing that we are in a huge momentum upswing right now just kind of lets us know like what's going on. So we ended the month bullish as well, so that's always a good sign. So let's jump down to the weekly time frame. And these are just notes, again, from my live sessions. So ideally, there's a couple things here, right? So we have this huge weekly, technically this is a monthly order block, but a series of weekly order blocks right here, right? And we have this old inverted fair value gap right here. So ideally, I want to see the market continue to go higher. And coming into last week, actually coming into yesterday, this was an entire bearish, entirely black candle. Yeah, and at one point on this daily time frame, this was a fully red candle. And I was looking to see how we were going to respect this. On one of the live streams, I called this out that, the market may run. This is a daily fair value gap if we zoom in right here. And we mitigated, half of this fair value gap, drove down the consequent encroachment. Yesterday and Thursday, it looked like we were going to start to be bearish for the week. So I really thought we could come back down to this zone, really mitigate this, and then look for an opportunity to continue to go higher. If we didn't respect this, then we probably would keep going down. But jumping back up to that weekly time frame, we saw, obviously drag this back down to the weekly level. We saw that the market didn't really respect this level, or did respect this level, this weekly fair value gap here. And again, this weekly fair value gap is like 18,359. 349 to 18,610. So it's a huge imbalance. So the market come through. We also saw pretty much a breaker situation here. So there's a little bit of an overlap of concepts. If you guys are my students, I haven't introduced this concept of a breaker yet. We'll get to there eventually. But it really overlapped with this as well. So I kind of saw this as an opportunity for the market to continue to go higher on the weekly. I just thought it was going to happen a little bit sooner than it actually did. So, but this is a good sign. So not only did we respect this breaker, we respected this inverted fair value, or this bullish fair value gap, and then the level here, this BISI, this consequent encroachment of this BISI here too. So everything is looking good for us to continue to take this go higher. So as I'm looking at weekly levels, again, you know, we always measure the consequent encroachment of these wicks, which is lines up there. So I'll make a note there and just say weekly consequent encroachment. And all I'm saying here is that I want to see the market stay and close above these levels. Again, the actual weekly consequent encroachment of that gap. And then I think this should line up too. Yeah, lines up. So these two levels are what I want to see the market really respect. So we could see something like this upcoming week on NASDAQ, where we come to this level or this level and really run towards the high. Again, this high from last week is still going to continue to be my target. So I'll be looking to run for that. Also, there is a gap as I get rid of a lot of this noise from the smaller time frames. There is an old volume imbalance that's sitting right here. So primary target for this week is going to be actually this. I want to see the market run to this gap from where we're sitting. And this is 18,751 to 18,800. So it's a 50-point volume imbalance here. But again, I know the market's going to want to run for this. So first initial target will be here. Right. So I'm just going to make a note saying primary target. If we get an extended run, we could go higher than this and we could take out the high again. So I'll be aiming for this week. But then once we get here, I'll look to see what happens, and we could be coming back to take out this target. So we'll see how that reacts. Let me go to the comment section. M Grove says link to my YouTube channel. So let me go ahead and drop that really quick. I'll drop the link to my YouTube channel. And if you guys aren't subscribed, let me know if this link works. So it's just Brinks Trades, so BRINX Trades. If you search that, you should be able to find it. If that link doesn't work, but let me know if that link doesn't work, and I might be able to post a different one. So, yeah. So again, we're bullish. We want to see this happen. I'll be looking for bullish opportunities. If we jump down to the 4-hour time frame, again, we see us respecting that daily consequent encroachment. So if we're making this a little bit clearer, we could see something like this easily play out. And I'm just going to jump down a couple other time for, yeah, I definitely can see this happening. Something like this. So again, I want to see ideal level will be consequent encroachment of that gap. So I want to see the market really run to that level, and then I'll look for opportunities to potentially buy in that zone. Again, that's what I'm going to be trying to do this week. So yeah, so that's NASDAQ. Let's go to US500. Same idea here. Again, let's jump to that monthly time frame and see what's going on. We know that NASDAQ and our rest of our indices are going to move very similar. And we got the same thing running, right? We're on a huge bullish trend. We traded into this overall imbalance here. Go to the weekly time frame. We saw a little bit smaller imbalance on this. If we zoom in, from that low to that high. So again, we saw the market come down and respect this. We also have a breaker situation here. Again, we'll get into this. If you guys are my students, new concept we haven't taught here. But again, you know, you guys, I'll give it to you guys over time. If you guys are my student, just know there's 10,000 ways to enter into a trade. And I just taught you guys the easiest one, but I didn't teach you guys everything I know. So again, you know, we see this level being respected here. And so we want to continue to see this, you know, run towards our all-time high here, which was our last week target. And overall, a lot of times, you know, our counter trend weeks or the weeks that the market goes against us, they're really just going to be the formation of an order block for that week on the higher time frame. So, you know, again, take a step back and see, you know, if you have a bias for the week and for some reason it's not forming, just kind of take a step back and say like, okay, what's going on? So a couple levels here. We did break out of this fair value gap and then this old BISI here. So what I want to see here is the market run for this particular level. I want to see the market do something like this week. Boom. See the market run for that and take out that high. So really, ideally setup would be market running to 5,269 on US 500 and then taking it to the high. Same thing, obviously, if you're trading ES, so it's going to look pretty similar. We did violate that volume imbalance. I'll get rid of that. So ideally, I want to see the market do something like this. And really continue to run for that high. And that on that level on S&P on the ES, or I'm sorry, the ES futures is 5,274 to 5,334. So that consequent encroachment level is 5,285. So very similar to what we're seeing on this. But again, I want to see how the market respects. We took out a level of liquidity here, which is this all-time high at the beginning of April. And we've really been dancing around this level since then. So really how we react to this overall imbalance here is going to really let us know what the next few weeks are going to bring. Ideally, I want to see the market continue to go run higher. I want to see if we are going the other way. I need to see like a very, very rapid, like just flushing away from this area, and we haven't really gotten that. So this kind of leads me to believe that we could continue to go up. But again, how we respect this imbalance here on, you know, US 500 or ES is going to be key. So this is pretty much a clear area to watch. I really do like NASDAQ setup a little bit better. It just gives me a little bit more confidence that we're going to continue to go up based on what we're seeing here. So if you're an ES trader, you know, just be cautious. Again, you know, I mostly primarily trade NASDAQ, but I use all three of these to kind of give me a better understanding of where I think the market's going to go. And so if I was an ES trader, I would really be looking at NASDAQ and seeing what NASDAQ is doing is just a little bit more clear. The reason for that is because on NASDAQ, we fully traded outside of this. I mean, we have a huge wick kind of digging down into this old area here, actually. Yeah, we have a huge wick that's breaking down to this old area here. And it's really telling us it's respected, not only this daily, but this weekly imbalance. We have, you know, previous structure in the form of a breaker on that weekly time frame that's kind of giving us that more of that confidence. So there's just a lot of more here that I have confidence in that we're going to continue to go higher versus ES, where we don't really see. It's kind of convoluted. I can kind of make the case that we grabbed liquidity here and we're going down still. So really how we respect this imbalance is key. If we start trading, if we fully get out of this imbalance here and run back, so if we fully trade out of this imbalance, do something like this, and then go higher, I'll have a lot of confidence. But as of right now, we're just trading. We're still technically inside that fair value gap. So I don't have a ton of confidence in this. And obviously they're going to do the same. Most of the time they're going to do the same thing. Yes, and NASDAQ. But you just want to pick the one that gives you the clearest setup. If you do trade multiple, me personally, like I said, I only trade NASDAQ. That's just a personal thing. It's nothing wrong if you trade all three of them, or if you just trade one. It's purely personal. I just can't focus on multiple things. So let's go to DJ or Dow Jones. Sorry, I'm blanking. Okay, cool. So yeah, so if we look at Dow Jones again, this is going to be very similar to everything that we've seen. Let's go start in the monthly time frame. It's actually showing a little bit more bearish sentiment. The other ones are kind of engulfing this previous order block here. I could see a world where we dive into this old imbalance here, since we didn't really do that. Something like this. Sheesh. Okay, cool. Something like this to continue to go higher. We might not even need to get that low. Yeah. So I can see a world where we do this. Again, my students know, look at these two levels right here. And we talk about REH, RELs, right? So I can see a world where we do that and then continue to go higher. So really we'll be looking to see, overall I'm bullish on everything, but just there might be some variations on how we get there. Again, this is that monthly time frame. We might not even get that. We'll see what happens. It might not even go down that low. On the weekly time frame, again, that first time frame is the monthly, so it's going to take a long time. If that plays out like that, it would take forever. And we're actually getting signs of bullishness on this, so it might not even play out. So you're kind of getting a little bit of conflicted signals. But again, with the weekly time frame and the daily time frame, you kind of have to run with what's going on, because those monthly time frames will take a long time to get there. Okay, so there's a lot of levels here, and some of them aren't relevant anymore, so I'm gonna get rid of this. So really, I'm still bullish. There hasn't really been a break in structure for us to really confirm bearishness, but this is all just really, really consolidated, and it kind of lends itself to the idea that we could potentially run down, clear these lows, and then go back up. I'm going to stay away from Dow Jones for this week. I just don't like it, so I'm not even going to give a bias on this, because I can make the call both ways. I can see a world where we continue to go higher, and I can see a world where we go lower. So if I can make the case on both, I usually tell people to stay away and don't really look at those. So yeah, so let's go ahead and X Dow Jones. But based on what I'm seeing here, I want to be bullish. I have most confidence in NASDAQ. I want to be bullish on that. Bearishness, potentially on US500, and we'll know more when the week starts. Again, it's one of these things where it's kind of hard to call early on in the week, but I could see where we go higher or we go lower. And so again, with those, I usually try to stay away. If I can call both sides of the trade, it's not really a high probability setup for me. And so to me, NASDAQ is the one that looks the best for price to continue to go higher. So again, with us respecting this weekly imbalance, which is this huge, or the weekly breaker, which is that level that I just deleted, and then also us respecting these this daily fair value gap here pretty much to the T. It looks like last week was really just a run for liquidity at this level, this rest of this fair value gap here. So again, I want to see the market continue to go higher. Sorry, this is the one. I want to see the market continue to go higher and potentially retest these levels here on its way to go higher next week. So I'll be looking to see how 18,750 reacts, and then I'll be looking to see how it reacts to the target, potentially trying to buy in at one of these levels here, or finding opportunities to buy from this low to this target. So gives us like a 300-ish point range. So that should be good. So hopefully that helps you guys. I actually don't have time to stay on for questions today, but if you do have questions, hit me in the Telegram chat. Again, if you guys aren't on the Telegram, you can go on old YouTube videos and leave comments there. Like I usually try to find myself open and try to find ways to respond back to people. So if you guys have any questions at all, feel free to, hit me at any given time. And, maybe I'll catch you guys on the live stream. So peace.